Hey there. There is a vault in Kentucky sitting behind a 22-ton door, holding about 147 million ounces of gold. It's one of the most heavily guarded buildings on the planet, and not a single ounce of it backs the money in your wallet. Then, on August 18th, 2026, the US national debt crossed $40 trillion for the first time in history. And the internet did what the internet always does. The dollar is fake. It's backed by nothing. Buy gold before it all collapses. Okay, but wait, hold on. If the dollar really is backed by nothing, why is the entire planet still fighting to get it? Why does America sit on the world's biggest pile of gold while that gold backs absolutely nothing? What is actually holding up the money in your pocket? And why did the one invention created to destroy the dollar end up becoming one of its biggest customers? In this video, we'll cover everything you need to know about what really backs the US dollar. So, let's get started. Now, before we talk about what backs the dollar today, we need to talk about what used to. Because that answer was simple. Gold. In July 1944, while World War II was still going on, 44 countries sent delegates to a hotel in Bretton Woods, New Hampshire. And they made a deal. The dollar would be locked to gold at $35 an ounce. Every other currency would be locked to the dollar. Why would the world agree to that? Well, because after the war, America held roughly 3/4 of all the gold on Earth. If you were a foreign central bank sitting on dollars, you could walk into the US Treasury and swap them for real metal. The dollar wasn't just money, it was a receipt for gold. But the system had a crack in it, and one man spotted it early. In 1960, an economist named Robert Triffin sat down in front of Congress and laid out the problem. For the world to grow and trade, the world needs dollars. Lots of dollars. But the only way America can hand out dollars is by spending more than it earns. And the more dollars pile up overseas, the less anyone believes America actually has the gold to cover them. So the system that made the dollar king was designed from day one to eventually kill itself. That's called the Triffin dilemma. And yeah, he was right. Through the 1960s, America spent big. Vietnam, social programs, military bases everywhere. By 1971, there were roughly 4 times more dollars floating around the world than there was gold sitting in the vaults. France figured it out first and started demanding metal. American gold reserves dropped from around 20,000 tons to just over 8,000. And then came Sunday night, August 15th, 1971. Section 1. The night the gold left. President Richard Nixon interrupted television and told the country he was temporarily suspending the dollar's convertibility into gold. Temporarily. 2 weeks before that speech, his Treasury Secretary John Connally told him, "We may never go back to it. I suspect we never will." He was right. The gold window never opened again. Now, quick correction, because almost every video gets this wrong. Nixon did not end the gold standard for ordinary Americans. That already happened in 1933 when Roosevelt made it illegal for citizens to even own gold. What Nixon shut in 1971 was the window for foreign governments. So, where is the gold today? Well, it's still there. America owns about 261 million ounces, roughly 8,000 tons, the largest official stockpile in the world. And here's something almost nobody knows. There's actually more gold sitting under the Federal Reserve Building in New York than in Fort Knox. But most of it isn't American. It belongs to foreign governments. The Fed is basically the world's storage unit. But here's the part that should make you blink. On the government's own books, American gold is still priced at $42.22 an ounce. That price was set in 1973, and it has never been updated. The actual market price right now is around $4,500. So on paper, all of America's gold is worth about $11 billion. In reality, it's worth roughly $1.2 trillion. The government's own books are off by about 100 times. And even that trillion? It covers about 2.7% of the national debt. 2.7. So the gold is real. It's just irrelevant. Which brings us to the real question. If gold isn't holding this thing up, then what is? Section 2. The tax trap. Let's start with the answer everyone gives. The dollar is the legal tender. Pull out any bill and read it. This note is legal tender for all debts, public and private. Sounds powerful, right? Well, here's a fact that breaks most people's brains. In the United States, there is no federal law forcing a business to accept cash. The Federal Reserve says this openly on its own website. A coffee shop can legally look at your $20 bill and say, "No." So if the law doesn't force anyone to take dollars, then what actually does? Taxes. Meet Bob. Bob bakes bread. Now, Bob can trade his bread for his neighbor's eggs, for Bitcoin, for gold, for whatever he wants. Nobody can stop him. But once a year, the US government shows up and demands a cut of everything Bob earned. And the government accepts exactly one thing: dollars. Not bread, not eggs, not gold, dollars. So Bob is legally forced to go get dollars, whether he likes it or not. And so is every worker, every business, and every investor in the country. That's over 300 million people with no choice in the matter. And if Bob decides to just skip it, the IRS adds a penalty every single month it stays unpaid, and it keeps stacking. So this isn't a suggestion. That's the trick. The government doesn't need to promise you gold. It just has to demand payment in its own currency, and suddenly everybody needs it. The dollar isn't backed by a vault, it's backed by a tax bill. Okay, so taxes create demand inside America. But America is only about 4% of the world's population. So why does everybody else want dollars? Section 3. A receipt backed by a receipt. Now we get to the strange part. And honestly, this is the section I'd screenshot. Take a dollar bill out of your wallet. That bill is not an asset of the Federal Reserve. It's a liability. On the Fed's own balance sheet, your money is listed under the things the Fed owes. So what's on the other side? What does the Fed actually own? Mostly one thing: US government bonds, treasuries. Let me make that simple. Your dollar is a promise from the Fed. The Fed's promise is backed by government debt. And that government debt is backed by the government's power to tax you later. So the dollar isn't backed by gold. It's backed by a receipt, which is backed by your future taxes. That's the whole machine. And this is exactly why that $40 trillion headline matters more than people realize. The dollar and the debt are not opposites. They're the same object seen from two different sides. Which brings up the second thing nobody tells you. Where are all the dollars? Right now, the broad money supply, called M2, is about $23.2 trillion. And the total amount of physical cash, every bill, and every coin in existence anywhere on Earth is about 2.3 trillion. Do the math. That's about 10%, which means roughly 90% of all dollars have never physically existed. They're numbers in a bank's database. And here's the kicker. They weren't made by a printing press. They were made by ordinary commercial banks, typed into existence the moment somebody took out a loan. So when people say they're printing money, well, mostly they're not. Banks are. If you want a full video on how banks create money out of thin air, let me know in the comments. And speaking of physical cash, here's one you can win an argument with. There are more $100 bills in the world than $1 bills. 19.2 billion hundreds versus 14.9 billion ones. And the Federal Reserve estimates that around half of all American cash isn't even inside America. Wait, half? Sitting where exactly? Section 4. The world's operating system. So why does a farmer in Vietnam or a bank in Nigeria want dollars? 3 reasons: oil, habit, and debt. Start with oil. In 1974, after the oil shock, the United States and Saudi Arabia reached an understanding. Saudi oil would be priced in dollars, and the Saudis would park the profits back into American government bonds. In exchange, America provided security, weapons, and protection of the shipping lanes. This became known as the petrodollar. Now, quick myth-busting, because you have definitely seen this one online. There was not a secret 50-year petrodollar contract that expired in June 2024. The Atlantic Council actually had to publish a correction about it. There was a joint commission set up in 1974, and it quietly fell apart decades ago. But the effect was very real. Even today, over 80% of globally traded oil is priced in dollars. The Chinese yuan? Under 5%. And oil is the one thing every single country on Earth has to buy. So every single country on Earth has to get dollars first. Second is habit. And honestly, this is the strongest one of all. Look at these numbers. 57% of the world's central bank reserves are held in dollars. 89% of all currency trading has a dollar on one side of it. 54% of the world's export invoices are written in dollars. Now compare that. The euro sits at about 20% of reserves. The Japanese yen, around 5%. And the Chinese yuan, the currency everyone keeps saying is coming for the crown, is at 1.99%. Yeah, less than 2%. This is the table that explains the whole video, so feel free to take a screenshot. The dollar isn't winning because it's the best. It's winning because it's the default. It's like English, or like a plug socket. Switching isn't hard because the alternative is bad. Switching is hard because everybody has to switch at exactly the same time. But there's a third reason, and it's the one that quietly locks the entire world in. So what is it? Section 5. The trap and the twist. Here's something almost nobody explains. Right now, borrowers outside the United States owe about $14.7 trillion in dollar-denominated debt. Roughly 30% of that is owed by developing countries. And that's just the visible part. Through currency swaps, there's an estimated 25 trillion more that barely shows up on balance sheets. Think about what that actually means. Imagine a company in Turkey that borrowed in dollars. Maybe they'd love to ditch the dollar tomorrow. Doesn't matter. When that loan comes due, they have to go buy dollars. Their opinion is irrelevant. Debt creates forced buyers. And the more the world borrows in dollars, the tighter the trap gets. And then something happened that made that trap even stronger. From the last place on Earth anyone expected, crypto. Remember the question from the beginning, the invention built to destroy the dollar? Here it is. In July 2025, the United States passed the Genius Act, the first federal law covering stablecoins. Stablecoins are digital tokens pegged to $1. And the law says if you issue one, you have to back it 1-to-1, mostly with short-term American government debt. So every stablecoin bought by somebody in Argentina or Nigeria automatically creates brand new demand for US government bonds. How big is that? Tether, the largest issuer, holds around $117 billion in treasury bills directly. That makes Tether roughly the 17th largest holder of American government debt on the planet. Bigger than Germany, bigger than the UAE. Crypto was invented to escape the dollar. Instead, it became one of the dollar's biggest new buyers. The escape route turned into another door back in. So, taxes, debt, oil, habit, and now crypto. Sounds unbreakable, right? Well, not really. Now, I already know what some of you are typing. The dollar is collapsing, BRICS is going to kill it. So let's be fair and look at both sides. The cracks are real. In 1999, the dollar was about 71% of global reserves. Today, it's around 57. The first half of 2025 was the dollar's worst 6 months since 1973. And when the US and its allies froze roughly $300 billion of Russia's reserves in 2022, every central bank on Earth learned a very uncomfortable lesson. Your reserves aren't fully yours. Somebody else can switch them off overnight. Then, in 2026, during the conflict around the Strait of Hormuz, some ships were reportedly let through in exchange for payment in yuan or stablecoins. Deutsche Bank called that a possible turning point for the petrodollar. But here's the other side, which usually gets ignored. The Chinese yuan is still under 2% of global reserves. India's own foreign minister publicly said India has no policy of replacing the dollar and called it a source of global economic stability. And when economists studied what happened after Russia's reserves were frozen, they found the dollar's share of world reserves barely moved. So this isn't a collapse. It's erosion at the edges, which is a very different thing. And one more, because somebody always asks. Fine, then let's just go back to gold. Well, remember, all of America's gold covers 2.7% of the debt. Gold mining grows about 1 to 2% a year, and the world economy grows faster than that. Under a gold standard, 2008 and 2020 would have looked very, very different. If you want a full video on whether a gold standard could actually work today, let me know in the comments. So, in conclusion, the dollar isn't backed by gold. It's backed by something stranger, and honestly, something stronger. A government that can tax hundreds of millions of people, the deepest debt market on Earth, the world's oil trade, $14 trillion of foreign debt that can only be repaid in dollars. And the simple fact that everybody else is already using it. Gold is a thing you can hold. The dollar is a habit the world can't break. And that's also exactly its weakness, because this kind of money doesn't collapse when the gold runs out. It collapses when people stop believing. You can audit a vault. You can't audit belief. Now, maybe you're wondering what happens on the day the world does stop believing. What replaces it, and what would that do to your savings? Well, that's for another video because we're out of time. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.